Hello everyone, this is Mingjong. Welcome to today's video. So in this video, I'm going to show you how to identify the support and resistance levels for swing trading so that we can always buy near the support and sell near the resistance to maximize our profit while keeping the risk exposure low. So in this case, then we'll always have a better reward to risk ratio. So in the long run, then we'll be profitable. So let's just get started here. As you can see, I'm using the Dow Jones Index as an example to run through some of the case studies. But rest assured, you can just apply this method to any kind of the instruments such as like Bitcoin, stocks, futures, or even bonds. So no worries, these methods works universal. So let's just look at this daily chart here. As you can see, I'm using the date around 2017, which is around 3 years ago. So this is where the bull run starts. So as you can see, we have a bottom here, November 16. We start a great run here, and subsequently we have a range, and then we have another trend up, and then we enter into a range here. So the support and resistance just forms like a wall or a zone. You can see that I just mark this swing high here, and something like this. I just mark it, and from the swing low, I can actually mark this. And you notice that with this resistance and the support level, the price actually can respect it or to have some kind of the interaction with this support and resistance. For example, so after this swing high, and when we have a reaction, then I will just move it a little bit here. Okay, let's say we are somewhere around here. Go. All right, so at this point, after it forms a swing high and start to have a reaction here, then I will just draw my resistance level here, which is at a swing high level. So that means that in future, I actually expect some kind of the price interaction when it approaching this resistance. So after it forms a swing low here, then I actually just want to draw up another line, which is a support level. So after I draw up these two lines, then my expectation is actually to expect the price to have some kind of the interaction between this support and resistance level. So for example, so once I draw this support up, then I actually expect whether it will just bounce up or it will just fail to break through. So in this case, it's a support level, and when you see that the price approaching here, and subsequently you see this reversal bar, then you can just expect, okay, the price is actually respecting this support level, and this support level is really means something for this Dow Jones average in the index. So in this case, if you place a buy order, let's say after this reversal bar, then you place a buy order here, and with a stop just below the support, swing low, maybe give it some buffer. Then you can see that if you buy near the support level and if you sell near the resistance, then you can always have a reward to risk ratio greater than 1. So this is a good strategy when we buy near the support and sell near the resistance, because we always have a great reward to risk ratio. So this is the reason why we always aim to buy near the support and sell near the resistance. So in order to do that, we definitely need to identify all the supports and resistance and the key levels in order to form our battlefield in trading. So after that, you see that the price actually gap up and up to this point, but it didn't manage to break through or to actually just touch this resistance level and actually have a reaction drop back here. In this case, I would like to introduce another resistance level, which is around this level. So as you can see that we have a big spread bar, a very bearish bar, and this price dropped quickly and straight through. And this is what I call a supply zone. So I will just want to mark this bar here. So this is the supply bar where there is some supply originated from here all the way to this point. So this is quite a zone that important zone that I am actually paying attention to. So despite it, I call it a supply zone. You can call it a resistance zone or whatever that you would like, because the idea or the rationale behind is that there is some kind of the supply originate from here. So I would like to see the price actually commit above this supply zone before you actually touch the resistance. So I think this works out quite well. So once you actually approaching this zone, but it actually failed to commit above, it just hang around here for maybe 2 weeks, but eventually it just have a sharp reaction. After that, you can see that it actually goes up here. So once it actually commit above this supply zone and actually have a reversal bar from here on, actually it just tested this resistance level. So this is how I will look at the supply zone and also the support level and the resistance level. So once it break out, so you can see that the price actually breaks out here, and if we extend this originally I call a resistance line, now it actually become a support level. So once it breaks out and then the price comes back to have a test, and this level actually act as a support level rather than a resistance level that we called it previously, because it actually struggled to break out around this region. But once it's break out, the resistance becomes a support level. You can see that the price actually comes back here to have a backup action, test it, and then move away. So this is quite a nice or textbook style resistance become a support level. And here is another one as well. You can see that I basically just mark up the swing high here. So this is a swing high, and once it actually breaks out, and then first direction is actually quite a nice bounce up from this resistance turn support level. So this resistance line here becomes a support line once it breaks out. So it happened again. So this is quite a nice textbook style explanation of resistance turn support level. And some of the trade that we can initiate, I will just quickly show it here. So it's actually once the price move away from this support level, and this is another kind of the entry as well. So we always aim to buy near the support and sell near the resistance. So you can actually see that within this range or even this range here, there is a small or a short swing, like from here to here. There's a one swing that you can actually trade. So if we buy here and we sell there, then that means that we completed a swing. And here is probably another swing. If we treat this as a okay, let me introduce another concept. Okay, So I would like to introduce another concept called a demand zone. So as you can see that the price actually gap up from here. So we have a big gap up. So this is what I call, we have a very strong demand here. So this is the demand zone. So from here on, I think it's quite important to note that as well. So this gap area here is some kind of the demand zone. So if this is the first level of support that I would like to see, and subsequently is definitely this support line or support level here. So when you see that there's a reaction down here, and this gap area actually provides a very great support, because it is a demand zone where we see some strong demand, because it actually gaps up with a great volume here. So that means it suggests there is a strong demand here. So after the price have a reaction and get tested this demand zone, it actually reverse here. So this is another probably swing trade that some would like to trade, like from here after the close of the bar, or even at the opening of the bar, you see some kind of the rejection or the bounce up from this demand zone. Then we can just tag the entry and to ride on the swing here. So this is another swing within this range. Okay, let's just move forward. Okay, all right, so this is another trade here. You can see that if we buy near the support level, then we can expect a swing up. Okay, so this is another swing trade, but after the price reverse, then we probably need to exit the trade. Still, this is outside of the range already in an uptrend, and subsequently we have a range here. And if we just draw up the swing high here and swing low, you can see that this swing low actually get penetrated. Okay, so we have a swing high here, swing low get penetrated. So these are all the supports and resistance level. So finally it actually find the support level near the previous backup area. So if we just extend this line a bit, then we know that it actually provides some kind of the support from here on. So the price actually bounced up from here. You can see that it tested this support level. So originally is resistance. After a breakout and further it comes back to test it, becomes a support level, and then test another times, bounce up. So this is quite a nice area for you to initiate the entry. And this is how we can draw out the support levels, just by using typical swing high or swing low. So this is a swing high. If we extend it further, then we can see that after the price breakout, and you always tend to come back to test the prior resistance level, now turn support level. Although it didn't really actually touch it, but you can see that it's very close. So this is how you can judge that is some kind of the support level. And subsequently you can see that if we draw up this swing high, then after you break this, it actually didn't really look back and trend up very nicely, and we have a very strong uptrend. So this kind of the swing trade can last pretty long. So if you tag this, then you probably can trade from this bottom here when it's bounce up, or even here bounce up. You can just ride all the way until here if you want. Some will just exit after this slightly bearish bar appear. Some might just even just ride through. actually we can see that this is kind of a shallow trading range. If we just draw up the support and resistance line here, you can see that. So we just mark up the swing high here, swing low. So once it's breakout, but eventually fail and come back to test the support level, and actually just bounce up from this support level, and eventually it's breakout. This is another swing high here. So once it's breakout from this first level, it didn't really have a reaction like here, like the previous trend. So previously we have a reaction going all the way back to the support. Now we only have a reaction going horizontally, basically just consolidating instead of having some kind of the reaction back to test the support. So you know that like this is some kind of the hint that the market let us know that I'm ready to break out. So this is quite a nice trade as well. If you just bought it here, then you can just ride along the way to form it. Oh, sorry, not this. So this is another swing, and if you just draw up another line here, so this become a resistance once it just have a reaction, and once it's breakout, then the resistance line become a support line, which works out nicely here. And once it has a reaction, although it closed below that, but it immediately reverse the next day and continue the uptrend. So usually it's quite a simple and nice trade. From here on, you can draw up something like this, support and resistance. So in this case, we didn't really see any kind of the test after it breaks out of this resistance line, but we do see that the support level get tested one time, second times, or third times here. So this is how we can draw up the support and resistance using just normal swing high and swing low here. You can see that even during 2008 super volatile market, during this sharp sell-off, we can apply the same principle as well. So once we have a low here, you can actually take this, or even this. It doesn't really matter, because support level is actually I will always treat it as a zone or an area rather than one single line. So for example, the low is somewhere around here, so that means that I always pay attention from this line onwards. Just extend this, and I will draw another line at the absolute bottom here. So as you can see that the price actually respect this zone or this area very well. So every time that it just comes back to this zone, it will just bounce up, and second times it comes back to this zone and it bounce up as well. So this is how we define the support level, because you can see that this kind of level or areas or zones does provide some kind of the support, because once the price nearing or approaching or entering into this zone, it actually bouncing up. So this is how you can easily draw support and resistance, and always aim to trade near the support, buy near the support and sell near the resistance, in order to maximize your profit and have a great reward to risk ratio. So hope you enjoyed this video. So if you find it useful, just click like, and also over to my channel to follow me, and do remember to subscribe to my video channel so that you get instant notification once my new video ideas is out. So if you have any comments, just leave me below and I will definitely reply every single comment. Alright, thanks for your time and I will talk to you soon. Thank you, bye bye.